Welcome everyone to our PPP update seminar. This is, I was talking to my wife. She's saying this is the about fifth time I've done this, and she said, "Well, aren't they tired of listening to the same thing over and over?" And I said, "Well, unfortunately, the government keeps changing everything over and over, so it's never the same. So glad to see you here, and hopefully we'll get make it so that you learn a few new things as we go along today too. So what we're going to talk about today, there's some new rules since we last met. We're going to talk once again about flexibility, just to help clarify. It's where area I'm getting a lot of questions. We're talking a little bit about forgiveness timing. When should you request forgiveness, impacts. The role, we're going to go over again a little bit of the banker's role in the whole process, because I'm getting more questions on that. And then, of course, as always, anytime you have any questions, feel free to send them. Kim is doing an awesome job of keeping track of questions for me. So as we've done in the past, we'll address all the questions at the end. With that, let's get started. So this is one of the few slides that does remain the same other than the date. So the area is constantly changing. We're having to make decisions without complete information. So please keep that in mind as we go through here. Congress is still negotiating changes. They may or may not. There's some some talk right now. And we still are continually promised the additional 30-some rules that the SBA is expected to issue soon. Their definition of soon must be a little different than mine. I thought that things were held off since June, and now on Thursday we're going to be to October. I don't quite think of that as soon, but there are still supposed to be a whole bunch of more rules that are supposed to be issued. So we'll break this out into sections. So the new rules. So I think this is a good summary for where we are right now. So never quit, and always remember rule 1. So we're not going to quit. We're going to keep moving forward. So one of the new things that came out, and that actually is a benefit for some people, is the IRS, the SBA actually has defined who's an owner. What they did is for C Corps and S Corps, if you own less than 5%, you're not considered an owner. Now, being an owner for PPP purposes is bad, because if you're an owner, there are limitations. There are further limitations on owners than non-owners. So like many rules, they're fine discriminating against the owners, not anyone else. So for this purpose, you don't want to be considered an owner. In partnerships, there is not this 5% limitation. So if you are a 1% owner in a partnership, you're an owner. It was kind of interesting that their logic for C&S corporations is that they felt that if you didn't own at least 5%, you had no impact really on the decision making. 1% owner in a partnership may make the same argument, but for this purpose is not considered there. Sole proprietors, well, there is only one owner, so therefore you are the owner. Just kind of a reminder of the compensation caps. Nothing has changed in here other than one clarification I'll put in there. But if you're using 8 weeks for owners, you're limited to $15,385. For 24 weeks, for non-owners, it's $46,000. For owners, it is $15,385, same as non-owners, but your limitation for 24 weeks is $20,833. The reason for the variance is the non-owners are 24 weeks of compensation at $100,000 salary. because you're allowed 24 weeks of compensation with a $100,000 cap. For owner employees, they're saying if you're applying for 2.5 months of wages are included in your calculation. For owner employees, we don't care if it's going to go for 24 weeks. We're going to limit your compensation to 2.5 months earnings for a $100,000 salary. That's the reason for the variance. You can be further limited if your 2019 compensation is lower than owner amounts. Remember the quirk for partners and for sole proprietors, we don't look at 2020 at all. We look back to 2019. We look to see what your earnings are there, and we use that. We've discussed that in the past, but just as a reminder. But the one clarification that did come across is the cap, this owner employee cap of $15,000 and $20,000, depending if it's 8 or 24 weeks. That cap is across all businesses in which the individual has an ownership stake. In other words, if you have 3 businesses where you're deemed an owner, your total for the 3 is $15,385 for 8 weeks and $20,833 for 24 weeks. Now, that may not be how you applied, because when you applied, this rule didn't exist. This rule didn't exist until August. So there's just when you're applying for forgiveness that's going on for, and you don't have to worry about that you may have asked for too much of a loan as a result of this change. You use the rule, when you're applying for the loan, you always use the rules in effect at the time of your application. So don't be concerned about that, but it is a cause for forgiveness. You can pay an owner more, you just can't use any more than that for forgiveness. There are other quirks with owner compensation that I put in a nice little chart here. For S Corps, you're not allowed to add in your health insurance. You do get retirement. It's capped at 2.5 months of the 2019 contribution amount. For C Corp owner employees, you get to add health insurance as an employee benefit, and you also get to add retirement. If you're a partner or a sole proprietor, you can't add health insurance, you can't add retirement. So just there's little quirks into each one of these. Rent and PPP forgiveness. So you know my personal bias. This one really took me for a loop because it really was unexpected. So the statute says rent or lease payments paid or incurred in the real or personal property during the covered period pursuant to a lease agreement in force prior to February 15th, 2020 is an eligible PPP expense. That sounds pretty clear and simple, doesn't it? Then, effective August 25th, the SBA said, wait a minute, if you're paying to a related party, what we're going to do is we're going to deny all the rent, but will allow the interest on the mortgage of the applicable property during the covered period. So you eliminate all the rent, and then you look at the interest. And any ownership in common between the business and the property owner subjects you to the limitation. So some of you, as you may have differences in ownership between the rental building, It's a standard process, right? You have your rentals in a partnership outside of your operating entity. That's the way we do things at JAK, and it's the way we advise many of our clients to do it. Well, they're saying if there's one owner in common between these two, you have to look back to the mortgage. So what their logic is that they're putting you back into the position as if you push those entities together. So they're treating as if you have the same, as if you had put them together. That's why they're just looking at the interest during that period of time. Personally, I think that is a bad rule because the statute talks about I needed a agreement in place by February 15th. Agreement mean a rental agreement. In other words, I would have to show that I had the entity structured before any of the COVID issues, but basically they're saying they don't take my logic into stride, I guess. Another thing where this happens to several of you out there is subtenant. So you may rent out the entire business, the entire building, and maybe you use 2/3 of it for yourself and you rent out 1/3 to a different business, an unrelated business. In that case, if you're renting at $15,000 a month in my example, and if you sublease 1/3 of that to somebody else, you're not allowed to look at the full $15,000 per month of rent. It's 15 net of what you're reimbursed of 5, so you're only allowed 10. This one makes some common sense to me, so I have to give them credit for that. Give credit where credit's due. But notice too, for those of you that may be sole proprietors or may have another sole proprietor business you're applying for, household expenses do not count either. They'll look at that more as a subrent. So if you're allocating the expenses of your home to your business, why that may be an awesome income tax strategy, it is not a strategy we can use for PPP forgiveness. They are not the same. Paid and incurred. So the first slide we're looking to follows for me that this is what we've been talking about the whole time. For payroll, utilities, interest, and rent, they're saying that if you incurred an expense before the covered period, but paid it in the covered period, it is eligible for forgiveness. So the payroll examples that I'm using is if you received your loan on April 17th, and there's a payroll period from April 4th to April 17th that is paid on April 20th, this full payment is eligible payroll for PPP forgiveness. So one way you can look at it as either for payroll, it'd be all the payrolls paid within your payroll period are covered. Then you also get some extra payroll at the end. Remember where we talked in the past that your payroll for periods incurred during the forgiveness period, but paid on the next normal payroll period are eligible PPP expenses. They didn't change that. They just wanted to make it clear that amounts paid prior to the covered period do count, and that works. That works for interest, utilities, and rent. But what about retirement benefits? And this is one of the few times where I clipped and copied the exact rules in here. because there seemed to be some there's some debate among people, so I'll just tell you where I'm at. So for retirement benefits, let's look at it. Remember, you still can't get retirement benefits for partners in a partnership or for sole proprietors. Those people are still outside, but for everybody else, employer contributions that are paid or incurred during the covered period qualifies payroll costs. Next, that's fine. That's where we've always been playing. Second sentence is the employer contributions for retirement benefits included in the loan forgiveness amount as payroll costs cannot include amounts deducted from employees' pay or otherwise paid by employees. Easy example is the 401k deductions from your employee's account. Since you've already got that amount counted as payroll in your payroll calculations, you can't also include the same expense as a contribution to the retirement plan. That makes sense. Forgiveness is not provided for employer contributions for retirement benefits accelerated from periods outside the covered period. So what does that really mean? You can't prepay profit sharing for periods outside the covered period and use it for PPP forgiveness. But a lot easier if they put it that direct statement. But if you break out each of those sentences, this is the only guidance we have on that. It just says you can't, for example, you can't pay today for the profit sharing for periods outside of your covered period. And that makes a little common sense that you can't prepay for periods outside. As those of you that know me, that fits in pigs get fat and hogs get slaughtered. Can't really prepay for a whole lot. So now we're going to go back over some of the same things for a little bit here. So remember, we have options for flexibility. There's an 8-week or 24-week period, or maybe a period in between. So 24 weeks may be worth the wait. And the reason I want to put this in again is it sometimes takes a little while to embrace this. So what we want to show is that with the extra time, you can have some reductions and still have full forgiveness. So it's the same example that I've been using. So say you had 5 employees at the beginning of the period. Everyone makes $1,000 a week. You also have health insurance of $1,000 a month and a 3% profit sharing. Rent and utilities are $7,000 a month. Now you let 2 people go. That sounds like not too many, but if you think about it, in this example, you let 40% of your workforce go. You stopped profit sharing and you reduced the wages of everybody else who's there by 20%. So there was quite a change in this circumstance. 40% reduction in workforce and a 20% payroll cut on everybody else that remains. So if you look at the monthly payroll that we started with, you took the wages, health insurance, profit sharing, those are all deemed payroll costs in this example. We're multiplying, you come up with the total, you multiply by 2.5 for 2.5 months. So you applied for a loan of $69,167. Now, whether you use 8 weeks or 24 weeks for your forgiveness calculations, the amount of the loan doesn't vary. The amount of the loan is always 2.5 months of wages. That's the maximum anyone could ask for. I know a few of you asked for less than that, and that's fine, but no one could ask for more. So now if you look at the wages for everybody, for 3 weeks wages, 3 weeks benefits, got to my total payroll, non-payroll costs, get up all the costs, then I multiply those costs times my full FTE ratio, full-time equivalent employees. Remember, I had a reduction in my workforce of 40%. So that means I take my expenditures and multiply that 60% factor. My total allowable expenses after that modification in an 8-week period is only $23,520. My loan is $69,167. That means I'd have to repay $45,657 in this circumstance. Why? I had a large reduction in workforce and I had a reduction in pay for anyone that remained. The same business, if I'm allowed to use 24 weeks, if I choose the 24-week period, even though what happens is my total costs times my reduced ratio is still above the loan. So even in these drastic circumstances, the loan is fully forgiven. Now, these are numbers I chose. It's not a real life example. It's just showing you that the wide variance you can get depending upon what you choose. It's also meant to show that we don't get so worried about finding all the expenses if you're using 24 weeks. The key thing in here is that when you multiply this ratio, when you look at all your costs, you add everything together, and then you multiply it by your FTEs. If you multiplied the loan by the FTEs, that would be a bad thing, but it's not. You are doing the total expenses multiplying times the FTEs, and that's the key thing. That's the key thing. So, math takeaways. Since you applied for 2.5 months of payroll, no matter what period you use, you can now use almost 5.5 months of payroll. Remember, 26 weeks is 6 months, and we're using 24, so that's why I'm saying 5.5 months of payroll. You also get 5.5 months of rent and utilities. So the changes in FTEs are not as important due to ordering rules. Remember some of our earlier conversations, we spent a lot of time on how to deal with the FTEs, how to move people between Schedule 1 and Schedule 2, and to deal with reductions in wages and who fits where. Now it's teaching us with the larger period, it's less important. Yes, still do the work, but don't sweat all the details. Don't sweat all the details. You're not required to put in every expense you can find. If you got more than enough expenses, then don't worry about finding everything. You'll still get full forgiveness. Make life a little easier on yourself. Next part is, when should you apply for forgiveness? That's you're not going to hear a lot of change here for a little bit, but I do strongly advise, unless you're going to use 8 weeks, I want you to wait till the end of your 24-week period. Why? Because you are required to make certifications that go to the end of the 24-week period. It's whether you use the easy form or the long form, you still have to make certifications for the entire period. Pardon me. So let's wait till you can make them with certainty, and then it should make your process go better. There is still talk about some automatic forgiveness of certain loans. We'll talk a little more, but it's the loans under $150,000 is where they're talking right now, because if you forgive loans of $150,000 or less, what that will do is that'll cover 75% of the loans that were given as for the PPP program. So that would be about 3.9 million loans would be automatically forgiven, leaving about 1.3 million that they have to deal with. However, it is only 25% of the total dollars under the program. So they'd still be looking at 75% of the dollars with eliminating 75% of the loans. The next one here is just a reminder that there may be additional funds available, and we're going to talk about this later too, but remember how the rules worked with loans. You could only ask for one loan. If the rules changed from the period you requested your loan, and then the rules got more generous, and sometimes they did in that process. There was questions about what did you do with profit sharing? Could you count partners? What did you do with how did you deal with all the sole proprietor expenses, right? All those things may have come in after you applied for your loan. Oh, I can add that, I can get more money. And the answer was a resounding no. You're allowed one application for a loan. What if you're only allowed one application for forgiveness? What if you're only allowed one application for forgiveness? And maybe you can ask for an additional loan if the rules change. Now, if they call them two separate loans, you're allowed two separate forgivenesses. This sentence is immaterial. But if they say it's really part of the same program, you're only allowed one forgiveness application, wouldn't it be better to wait until you applied for forgiveness for everything altogether? This may be a little conservative, but I also I don't want you to get caught sideways. And so a nuance that some of us are dealing with here is longer time periods may help with QBI calculations. QBI is qualified business income deduction. That's an extra 20% deduction that's used by many S corps, partnerships, flow and sole proprietors. In other words, flow through entities. If QBI limitations are an issue for you, we may want to use the longer time period to help maximize some of your tax deductions. If anyone has specific questions on how that means and how to go about that, happy to talk to you aside by that. So I'm not sure we'll have time yet tonight, but so let's keep going. So here's the possible legislation. So there may be an easier forgiveness application. I will tell you, both sides, Democrats and Republicans, are all for this. We were hoping that they would pass a bill with what they agreed upon. And they decided, no, they'd rather not. They'd rather wait until they can address everything all together, which is unfortunate, but it is what we're dealing with. There also might be additional loans for small businesses that have a reduction in revenue. This reduction is varying, but sometimes they're looking at 1 quarter. If you show you have a significant reduction in a quarter, there may be an opportunity to ask for additional dollars. And maybe some of the dollars that are under the PPP program that weren't used, maybe other dollars. They've also talked about targeting specific industries versus any small business that had a reduction. Small has been looked at, defined as 300 employees or less, 200, there's somewhere in that range as a cap versus the 500. Because we're in election season, I would not expect anything to get done until after elections are over. You may have heard that Representative Pelosi and Secretary Mnuchin are talking back and forth. So just the lay of the land, the Senate put together a bill of about $1 trillion of additional expenditures to deal with this the economy here, and the representatives have put together about $3.4 trillion of expenditures. This week, the House has moved it down to about $2.4 trillion. I've heard Secretary Mnuchin has said, has told Representative Pelosi that I've been told anything above 1.5 trillion is a non-starter. So I'm not very hopeful for anything to get done until after the elections are over. And then there also is the potential of deducting PPP expenses used for forgiveness. This had a lot of big support earlier on. From my sources I'm hearing from, it's delaying. There's a waning support for this, as they'd rather allow you, rather than allowing PPP expense deductions, I'd rather use that money for additional help for specific businesses. All right, Todd, you've talked about a lot of stuff, but what should I do? So this would be my direct statement. So if you have full forgiveness and your business does not have a reduction in revenues by over 30% in a quarter, I would apply for forgiveness when your covered period is done. That makes a lot of sense to me. You're applying for forgiveness in the period when you have the expenditures. It cleans up your balance sheet. The odds of anything additional for your type of business is pretty no. If you have a larger reduction in revenue, you may want to wait to make sure you can get both the original PPP loan and a potential additional PPP loan forgiven. Remember, you can still apply for forgiveness by early February, and you will not be required to make a payment on the loan. So there is no, if your loan was granted prior to June 5th, there is no specific time to apply for forgiveness. The only thing is that if your loan is not forgiven within 1 year of receiving the loan, you have to begin making payments on the loan. Remember, the payments on the loan are deferred for 12 months. So if you apply by early February, since no one got a loan until early April, you will have 60 days between the time you apply and the 1 year anniversary. Therefore, you should not have to make any payments on the loan. All right, so when is a loan forgiven? And I wish the accounting community would come together. They were our the FASB, Financial Accounting Standards Board, understands that there's a bunch of ways to look at these loans on when it is forgiven. They understand there's multiple ways to look at it. They understand that there is conflict between the different ways to look at it. They also understand that they will not address this issue. So therefore, we're trying to figure out what we believe is best. So there's a couple different ways to look at it. Let me talk through a couple of them. One of the ways is to say it was never a loan. It was a grant, so there's nothing to forgive. It was just a grant when I got it. Well, I don't think anyone really would follow that by and large because you signed loan papers. The whole program is about loan forgiveness. So if it's about loan forgiveness, I need a loan to forgive. The next one is, do we look at it that is forgiven when the bank makes a forgiveness decision and applies to be reimbursed by the SBA? That's within 60 days of receiving the forgiveness application. And this one makes a lot of sense, that do you wait until once you've gone to your bank and the bank says, yep, all your paperwork is in order, we agree, and they pass it along to the SBA. At that point, you should be fine. You shouldn't have to, the bank is saying that you don't need to worry about anything. Someone from the outside has said everything is in order. The other way to look at it is it's forgiven when the SBA pays the bank. So the way it works is you fill out the forgiveness application, you turn that along with your documents into the bank makes sure that things work, then they turn that paperwork into the SBA. SBA then, if everything looks fine, they then repay the bank. So do we wait until everything's been repaid? The most conservative is it's not forgiven until the potential review period ends, which would be 6 years. I don't think anyone's using that either. So one of the things we're looking at, and you're not going to get a 1099-C, that's a debt forgiveness form. That's not going to be sent out by any of the banks to the IRS. But the bank will tell you when the SBA has repaid the debt. So you'll know when they apply for send in the forgiveness paperwork. You'll know when they're paid back. So the easiest way to kind of pull everything together, barring future guidance, and there might be future guidance. I know the AICPA is working on trying to pull something together because they know it's very important for you, our clients, for other people that help people through this process. They know we need answers like now. So one of the ways to look at it is if you can apply for your forgiveness in early November, that means that your bank or other financial institution should be able to turn in your paperwork to the SBA within 2019. Therefore, we met step 1. Step 2, about if you want to wait till the SBA repays the bank, if you want to make sure that is done. That allows another 90 days afterwards for that to happen. So for those of you that issue financial statements, we should know whether everything is paid back by the SBA by the time of issuing your statement. So that may be a good rule of thumb, is just to apply a little earlier, make sure and allow those time frames to start ticking. A little bit about banks. So the bankers are going to check that you submitted the application, the calculations are accurate, you gave them documentation that ties to the application. Life is good. Notice what they're not doing. They're not auditing. They're not testing for reasonableness. Just that the amounts submitted are supported. They're also not tying back to that wonderful form you had to fill out when you did your application. You notice that most of the institutions had they wanted you to put out how you were going to spend the money during that eight-week period, didn't you? We had to put in payroll, we had to put in rent, utilities, etc., adding it all together to show how much of the loan we did expect to use. I really thought the purpose of that was to cross-check at periods of forgiveness, but I guess that's the old auditor coming out of me. That's what I would have done, but I think like that's not the way they're thinking. So in other words, they can rely on borrower certifications. They're not auditing. They just want to make sure that the numbers work. And notice what that lender is sending to the SBA. They have to say that the submission, that is the forgiveness, accurately reflects the lender's decision, that the loan forgiveness reflects the lender's records, that the lender followed the SBA rules, that the loan had not been canceled or repaid, and the lender had not made a previous loan forgiveness decision unless it's a resubmission. So we do know that you can resubmit if there's an error, but that's what's going on. There's not a lot of documents going back and forth, guys. So actually the lender holds on to all that supporting documentation. They keep it. It does not go into the SBA. They give them the forgiveness form. They give them the Schedule A. That's the payroll form. If you filled out the demographic information, they get that. But if you don't fill it out, that's fine too. The SBA may ask for something else. If they want, then the lender will send it, but they're not going to send it ahead of time. And if there's a review of the loan, you'll be told. Well, remember, there's a mark on the PPP forgiveness application that says that whether or not you've got a loan of over $2 million. Remember, they're going to look closer at those. But that's it. And this is how fast everything's working right now. So here's the status of the PPP forgiveness. There were a total of about 5.2 million loans out there. A whopping sum of 96,000 forgiveness applications have been submitted to the SBA. That's less than 2% of all loans. 0 of the forgiveness applications have been approved. 0 have been denied. That's a whopping total of 0 decisions. Now, they're still within their 90-day period, right? Because the portals weren't even open until mid-August. We're now to the end of September, so we're about 45 days out. But so we're about halfway through the period. But it's kind of disappointing that they haven't done anything. Now maybe they're also hoping that the forgiveness will get easier and automatic, and they're just waiting. But right now, as of last Thursday, this is the last statistics I have read. So here's a couple of the takeaways. Don't worry a lot about it, because most loans should be forgiven 5.5 months of payroll and rent and utilities to cover 2.5 months of payroll and benefits. That's how we apply it. It's payroll and benefits times 2.5 months. That means FTEs are not as important as we thought they would be. There's nothing in here that talks about uber critical tracing rules. It's all about how did you spend the money. They want to see they're looking up for the expenditures, not where did the money come from. One of the things we haven't talked about directly, but indirectly, make sure you have some money left for taxes. Because even though the loan itself is not income, the expenses used to pay the loan as statute drafts sits today is not deductible. That gets you to the same point as if the monies received from the loan are taxable. So you're going to need some of those dollars will be needed for income taxes. And banks are not planning a detailed review, so don't expect them to really worry about all the minor details. I want to quick put a plug here for a few other seminars that we got a few. It's seminar season here now. We actually had one at noon today on Microsoft Teams. Then Cindy is doing one in October on choosing a personal representative for your estate. Kyla is going to do one how to ensure a smooth business sale. Could be very timely to a lot of people here. And I'll show you that I can talk about things other than PPP. I'll be doing one about year-end tax planning, and it's not going to be your standard process, depending on how the first Tuesday in November goes. There could be a lot of changes that we're already looking at. So the other webinars we've done are always on our website on our education page. And no, I did not forget, we will get to questions. So I've got a number of questions here. That's perfect. Thank you for sending them in. So I'll address them as best I can. So question here, we did our calculation of the max payroll that qualify for PPP. We had commission sales reps that made over 100. With the reduction in sales, a few of the $100,000 sellers are now on track to finish below 100. Do we need to reduce our forgiveness amount even if they earn less than 46,153? So what you do, I think what they're really saying here is you have to look at the actual payroll paid during the period and incurred. So if they did not earn enough in that period, you're going to use the lower amount. You're going to use the lower amount. So you're going to look at what was actually there. Yes. And what happens if you have a related party rent and there's no mortgage on the property? It's the answer I don't want to give you, but it is the accurate answer. There is no rent deduction then, none. And that's one of the things that kind of ticks me off because the person who put it out there, that's the reason that I'm impacted pretty much. We've been working hard trying to pay down our business loans, and that's a problem. So, so just to clarify some of the payroll. So payroll incurred before the covered period and paid during the covered period, that counts as payroll. Absolutely. Payroll incurred in the covered period but paid after the covered period is also eligible if it's paid by the next normal payroll period. So English, you will always get more than either 8 weeks or 24 weeks of payroll, depending on what period you're using. There is that middle ground you can choose to, but you still you have to make the certifications over 24 weeks. So yes, when you look at the math, it's you're almost always going to have more. It'd be a really weird situation for you not to. So just to clarify profit sharing, so let's talk about the way we're reading the SBA documentation and the rules. If I had 2019 profit sharing that I accrued and I paid, let's just say you paid it in July. You paid it in July, that will be an eligible expenditure because you paid it during your forgiveness period if you use 24 weeks, right? I'm assuming you're using 24 weeks. So if you did that, you will get all of the 2019 payroll of the profit sharing because it was paid in the period. You will also get the profit sharing earned to the end of the covered period in 2020 if it is paid within the covered period. Because remember, it just says you can't pay in advance. And since there's not a normal payroll date or payment date for profit sharing, we're strongly advising that you pay the profit sharing that you want to include within the covered period. I will tell you that's what we did here at JAK2. We paid the profit sharing that we wanted to include in our forgiveness app within the covered period. Let's see. If you're using the 24 weeks, and if you don't meet the minimum, you get no forgiveness. But if you use a shorter term, you may still get some forgiveness, at a different percentage. Did you cover that using a longer term that if you didn't meet the minimum? I'm a little, Portia, if you just want to, I will talk to you aside. I'm a little confused by the question. I'll follow up with that. I apologize. Let's see here.
Todd?
Yeah, Portia.
Thanks for letting me jump in. So we had NATP education on this last week, and the speaker pointed out something I had missed. And that is that when you take the longer period, you must have 100% eligible expenses to get any forgiveness. If you're using the shorter period, you would need to have, it looks like 60% of the qualified expenses are required to be used for payroll versus the original 75%. So if you elect to use the 24, according to the speaker, and she has the citations here, if we elect to use the longer period, the 24 weeks, we need to make sure that our client does in fact have 100% forgiveness, meaning they have to have spent 100% of the funds on eligible expenses. Whereas if they use the shorter period, they only need to have 60% qualified expenses be used for payroll versus the original 75%. So that was her caution about going to the longer term, is that you may have some clients that still with the longer term did not spend enough to meet 100% of what they borrowed. And so in that instance, you really needed to take a look at the shorter term because you might get some forgiveness, whereas you would get no forgiveness under the longer term. So I thought I'd share that with you just in case it was something new to you, because it was completely new to me.
Yeah, thank you, Portia. Yeah, there are some nuances with the they tried to clear that up for the loans before June 5th when they went through to try and make some things clearer.
I have not fact checked the citations that she has. Would you like me to send those citations?
Sure, if you would like to do that, then I can make sure I can put that together in here.
Thank you.
If needed. Yep. Thanks, Portia. So with the revenue reduction, person had a question, is that right now it's any particular quarter. If you're greater than 30%, you may want to hang on. So it's any one quarter that can be an issue, as some of the proposals are. So if you fit in any quarter where we might have a greater than 30% reduction, you may want to hang on. If you have those specific questions, of course, we could follow through later, because everyone's situation is a little unique. So we want to make sure that because each business is unique, right? But you may want to hang on, then we can talk about whether it makes a lot of sense. I skipped over this one, so I'll complete it. So this one here, the covered period ends June 21st. That leaves 1.5 weeks of benefits and unit benefits out of the covered period, and 3 weeks covered that will be paid in the beginning of July. Do I need to prorate June for 3 weeks covered if all monthly payments for benefits are the same every month, beginning of the next month? All right, so we have to watch. This is where you get a little art as well as science in here, okay? It's not really, here, I would feel comfortable, this is opinion, but I'll give you the reason, the logic for it. I would feel comfortable here taking the amounts paid during the period. Each, let's say it's just always paid at the beginning of the month. So on the first of the month, each of the payments paid on the first of the month, I would take that. I would also prorate the one that is paid at the beginning of the next month. And the reason I am saying you can prorate even the benefits in this situation, because there is a normal payment date. There is a clear normal payment date of when you have to do everything. So we want to, since we're following the normal payment date, I'm using the payroll rules for this because the normal payment date rules are cited also in utilities. So I'm just expanding it here to this particular employee benefit. So so if your loan forgiveness ends after September 30th, you can apply now. That's fine. If your period ends, that works out great. I'm not saying you have to wait till November. I think it makes sense. What is the baseline compared to for when you're looking at that 30% reduction? It's just the prior quarter. Each quarter stands on its own. That's the way the initial rules were written. Each quarter stands on its own. I'm not talking about a reduction in any one quarter. Granted, these are just proposals. They're going to have to be ferreted, negotiated, et cetera, through the process. And it was really a number a little greater than 30%. That's why I'm using 30 as an upper limit. Oh, yes, S corps and health insurance. If you do it right and you throw the health insurance in wages, I think it can be included too. If you leave it as health insurance, you can't. Can a lender request payment starting November 1st to them if we have not submitted forgiveness before then? Answer to that is no. No, the lender cannot request you to begin the payment, because the first year's payments, the first 12 months, is deferred for the first year. So if you took out the loan April 1st, they can't request a payment for you prior to April 1st. So that's the reason I was picking that November date, to allow everything to kind of ferret out. Can you use 100% of PPP for payroll? There's going to be some people that may do that just for simplicity. I can show that. In fact, I was talking to a client yesterday. He has a round numbers about a $40,000 PPP loan, and he has about $50,000 in eligible payroll. And he can just show payroll and make it all work if he wants. That works out really fine. Just watch when you do that, the impact that could potentially have on QBI. But if you have plenty of other payroll for the rest of the year and you're only using a small portion, et cetera, or your earnings are low enough or the phase outs aren't important, go for it. Make life simple on you. So whether you want to use 8 or 24 weeks just depends upon when you've used up all the money. It's very difficult to use up all the funds within 8 weeks. It's really tough to do it. That's why they gave more time, because they're having to see more of these loans paid back. Remember, the banks all want these loans forgiven. They don't want 1% loans in their portfolio to continue forward. Let's see. Number of employees have to equal the number of. All right. So when you're doing your calculations for full-time equivalents, that's one of the questions. It's a matter of doing the right math. So if you're using 8 weeks and you had a reduction in employees in addition to having tight time frames, you really want to be very accurate in your accounts, because what you have to look at how you separate everything. If, however, you're using 24 weeks, it's not near as critical because your expenditure should be far greater. But if you've used up all the funds and you paid for them all within the period of time, there's no need. You have to hold on to employees if you spent everything. Then we'll talk about when does the forgiveness, when can you not deduct the expense? So if you didn't have forgiveness in 2020, can we deduct the expenses in 2020? We're waiting for a little bit of guidance. I know what my personal opinion is. My personal opinion is, since I listed the expenditures in a specific period as expenditures leading towards forgiveness, it is those expenditures that I can't deduct. That's an obtuse way to say I can't deduct the expenses in 2020, even if I don't apply till 2021. Now, that's Todd's opinion. There's no guidance on this at all, but that's makes a lot of common sense to me. There's a little confusion. So what Portia talked about, does that negate what I talked about using a 24-week period? No, it doesn't. There is a nuance. If you can't get full forgiveness, there's some cliffs buried within there. There's some cliffs if you can't get full forgiveness. I haven't brought them up in these talks because it's a very detailed calculation. But as long as you're getting full forgiveness, everything I've said works full and well. Health insurance, again, question on that. So you look at what same type is, like a payroll expense. Everything paid within the period plus what's paid on the prorated period, because you got a standard payment time. Now, usually for me, if you look, the health insurance is paid early, actually. So watch for that. It's the $100,000. Yeah, if we add the health insurance into an S corp wages, yeah, that's going to impact the $100,000 compensation limit. Absolutely. The crudely, someone's asking if you got your money April 15th. And use a 24-week schedule. Would our 24-week period go from April 15th to October 15th? No, it's not quite there, because that's exactly 6 months. We're a little shorter than that, so it'd be 2 weeks shorter. There's also the alternate covered period you can use too for payroll. Again, Deb, happy to help you outside of here. can you supply, questions, can you use the 24 weeks and then later submit based upon 8 weeks? My personal opinion is no. I think you're going to be limited to one application. It's just my personal opinion. I haven't heard anything on that, but based upon the turtle's pace that the SBA is working, I'd want to figure out what way I want best. So we are going to be talking, try to get some clarification from the IRS on some of these forgiveness issues as far as the income tax impacts, so we can help guide you along the way to make the best decisions as you go along. I appreciate your time and attention. As always, you can feel free to call or email. Be happy to answer questions as we go along. There's a lot going on in the PPP world. Appreciate your patience and participation. Look forward to hearing from you and helping as you go through. Have a wonderful day, and we'll talk to you soon. Thanks a lot.